Happy Taco Tuesday and welcome back. Okay, so we got a jam-packed action video today. I did upload a very special video yesterday that I don't normally like to do. Although I guess maybe I really should do for a lot of other positions that I really talk about and own on this channel. Pretty much gave SoFi a very fundamental price target throughout 2026 based on what themselves as a management team, aka CEO, CFO, Anthony Noto, his team has projected. Now, a lot of you all, and firstly, we did gain over 100 subscribers on this YouTube channel. Woohoo! For those of you that don't know, I run other YouTube channels. I have a main YouTube channel, Nightmare RH. It's a gaming channel unrelated to the stock market. It has over 200,000 subscribers. I have not advertised this channel just yet. I'm looking to grow this channel very organically. It's kind of funny because some of my viewers and my demographics primarily are people around their early 20s up until I want to say like early 30s is my core demographics. I'm 37. Of course, I have viewers, you know, very much older than young 30s watching me. But a couple of them have actually found this YouTube channel, and it's pretty humorous. But if you are watching this and you're coming from the stock community, this channel is pretty much, you know, a little new and stuff, but I'm really here for the long haul. I love the stock market. I am a long-term investor, also trader. And I believe in making and building wealth in a very well-minded educational mindset. Doing a account challenge on this channel publicly for motivation to really show people that you can take a couple 5 figures into 6 figures, and you can do it either which way. You can take a couple 3 figures, couple $100, turn it into 1,000, couple thousand. You can go from a couple thousand to 5 figs, 10,000, tens of thousands, and tens of thousands to 100 to 7 figures. It doesn't matter does not matter about the number. It matters about your strategy, where you're putting your money, and are you gambling? So you're not going to find very much gambling on this channel. It's very well rounded. I stick to growth companies. Hold on, water, cheers. And in my opinion, it is a phenomenal time. I am not a financial advisor. It is a phenomenal time to start building positions or buying shares in these stocks that are going through a recession. Yes, we are not in a stock market recession. Individual stocks are going through a recession. It's pretty humorous. So I'm going to cover a lot of stuff on this video. Going to try to keep it under 20 minutes here. If you can do me a favor, you find value, smash the like button, subscribe, entirely free. We are now over 100 subs and some change. The next goal is 250 subscribers, baby. So if you want to see my previous video on this channel, it is yesterday's video, which, like I said, the reason I don't like doing like price projections is because anything can friggin' change. Anything can go ahead and change here. 21 hours, 385 views. It's honestly one of my top viewed videos, but yeah, we're at 106 subs. Let's go ahead and build this channel to 250 now, right? Anything can happen. SoFi could very well get into the S&P 500. Maybe that will boost us up. Maybe it won't. We could have a big labor market recession this year, and SoFi could very well be under $20 the entire year. Anything is possible. But yesterday's video, I gave a hard price target based on what Anthony Noto has stated. So all that can change, especially if Anthony Noto is going to guide upward, which he's used the word sandbag. So there's a good possibility anything can happen. But we have stocks right now that are just being beaten, baby. Not to mention a lot of people thought today was going to be another rally. So let's go ahead and talk about a couple things. Okay, so firstly, S&P 500 falls short and weak. Obviously, we're coming off of a holiday weekend. Yesterday was President's Day here in America. Stock market was closed. A lot of businesses were actually opened, believe it or not. I'm chiseling away at my MBA right now, my master's. And I actually had to go to my university last night for a night class, unfortunately. So some schools were closed, some universities were open. It was just real. I mean, President's Day is not necessarily like Martin Luther King Day, Labor Day. It's very overlooked. But hey, the stock market was closed. It does it does kill rallies. Going into holidays and also coming out of holiday weekends, whether let's say the stock market is, let's say hypothetically, let's say today's Monday and we have Friday being closed. This week is probably going to be very low volume, which means if something happens, we could very well get a lot of selling pressure, so stocks could go down. Now, vice versa, yesterday was a holiday, which means this entire week is pretty much shortened. Are there people like Wall Streeters on vacation? In my personal opinion, probably not. Is it like Thanksgiving weekend that I was making videos on a couple months ago, and I was buying stock left and right because there was a lot of volatility back then? Probably not. We're getting a lot of really good data this week. And, it's going to be a non-stop jam around data. So, oh boy, it's going to be big. Thursday, initial jobless claims. This can really sway the market. But then again, a lot of these reports are being revised. What does that mean? Keep the numbers simple. BLS, the government data agency, puts out a number of 250,000 jobs, right? And then they come out and say, hey, no, these were estimates. It's really 220,000. Right now, the market is so sensitive to anything, especially the banking sector that SoFi's in, especially the high interest rate stocks that also affect SoFi. We got software stocks falling off a friggin' cliff because they're in a SaaS recession about fears about AI, too much spending. Are these big companies going to be producing the amount of return on their money that they think they will be? So the slightest thing can throw off the market. Not to mention, we had our president nominate a Federal Reserve chair guy that has been known to be very hawkish. So a lot of people are all over the place. We know that President Trump wants to unfreeze the housing market. Why would he elect a very hawkish Fed member? Unless maybe the guy is not going to be a hawk. Or maybe President Trump knows something that we don't know, that maybe we're going in a labor recession. And if we're going in a labor recession, the guy has stated, the nominee to the Federal Reserve, if the labor market falls off a cliff, we will be aggressive cutting. But right now, we're showing that the labor market's actually very strong. So, but inflation is coming down. So there are so many different arguments, and this is just like, this is, when there is so much questions, stocks go down. And that is when you, as a long-term investor in great companies, you got to be clicking the freaking buy button. Yet I've been buying stocks left and right, like uploading videos. I did not buy any new stock today. I'm kind of really holding back on a little bit. But I've been buying the dip, like it's honestly for the last 4 months now. I have probably bought close to about, between my private profile and also this profile, I have bought close to probably about $50,000 worth of stock. Hard cash. Don't trade on margin. I got to go ahead and say that philosophy because honestly, trading on margin, yes, you can make a killing if you trade on margin. But understand the risk. It's a very risky game. Okay, it's not like having a credit card. Okay, it's not like taking out a small business loan. It's not like taking out a mortgage. Okay, it's not like your throat going numb because you're talking too much on YouTube. It's very risky. Very risky indeed. So, what's my strategy? It really hasn't changed. But all these questions are going to play a big role. Now, GDP is going to be very big. PCE, the Federal Reserve, Powell, loves PCE. Powell actually has stated that PCE, that Powell looks more at PCE than he does CPI. So this is going to be very important. Okay, very important. If PCE comes in low and inflation is just really, really it's a one-time thing because of tariffs. Hey, the new governor, the Fed governor that's coming on in, maybe he's going to cut interest rates because the Fed rate cut, because of the Fed, their internal rates are just too high and it doesn't match. Because you got to remember, why would the Federal Reserve keep interest rates high if inflation is low? The Federal Reserve is going to cut interest rates for two reasons. Inflation itself is super low, and the Fed's fund rate is super high, so there's a big gap. A big gap is not good. You don't need a big gap. Not to mention, Powell has already been printing money at the Federal Reserve like friggin' crazy. They've been doing that for the last, I believe, couple months now. 40 billion a month. Unreal when you actually think about it. So if inflation is cooling down, maybe that's what President Trump knows. Maybe President Trump knows, hey, we're not going in a labor recession, which honestly, I really don't want America to go into labor recession because I'm 37 years old and I've worked very hard to get to where I am in life, and I encourage everyone to do the same. I know personally that I will be fine, but honestly, there are people out there that will not be fine. There are people out there that there are people out there that are not in the stock market because they don't have extra money to really put into the market. There are people out there that are very much struggling, and if we do go into a labor recession, they could very well lose their jobs. So I am very much hoping and praying that it's the opposite, where President Trump and his staff, his administration, knows that this is bullshit. Inflation is dead. You gotta lower the damn interest rates. That will be that. I mean, straight up, that is pretty much like, hey, very much pro America, let alone pro the world. Hey, we're not going into like a recession. We're not going into a global recession. Inflation is just really a one-time thing because of tariffs. Cool. Awesome. Let's lower these interest rates, get the housing market unfrozen. I got some friends that have been shopping for real estate, and it kind of really sucks for them because they don't have access to a VA loan and such. I've personally used my VA loan a couple times now. You are allowed to use your VA loan repetitively if you are a veteran out there. You can use it once and then sell your house, and then reuse your VA loan on another property. You can use it unlimited times. It's not just, hey, use it once. So the whole point is that you get a VA loan, you're at I believe maybe 5.5, 5.6. Getting a regular conventional mortgage, you're in the low sixes, maybe even 6.5. So the interest rates need to come down, and they really should. That's really my personal opinion, and I hope that inflation is pretty much dead like the Trump administration has stated. So let's go ahead and look at SoFi here and all these other stocks, and then we're going to check out the public account here too. So right now, SoFi on a technical analysis, they're below all the moving averages. If SoFi dips, because I've been adding shares all the way down. I have over 2,000 shares of SoFi. Actually, let me pull up a calculator. 1642 on my private account. Then I'm gonna plus 413 on my public. I got 2,055 shares of SoFi, baby. Yeah, unless SoFi falls off a cliff again, I'm not buying unless we get down to 18 something. That's what I'm doing. But understand that SoFi is fundamentally and technically undervalued based on the charts and based upon where they should be trading on. Verbatim, Anthony Noto. Do you believe the management team? I do. I really do. AMD, another very big position for me on both my accounts. AMD on my public account here, obviously my biggest position. I'll get to my public account momentarily. AMD was actually below 200 bucks earlier this morning. It's recovering a little bit. It is very much holding on this big support that we have pretty much made here. We have made support back in November. The support doesn't have to be like great, but we did break a little bit, but then the following day we pushed higher above this support beam. So as long as we really hold this 195 level, we're probably looking good. AMD really is another one. I mean, honestly, if you believe what AMD is going to be doing for the future, for the next 3-5 years, it's a friggin' buy. If AMD breaks below 195, I'm going to be adding some shares on both my accounts. It's pretty funny because we actually touched this 195 today and bounced. Palantir is really another one. You're talking about the first time on Palantir and friggin' all the way back to 2022. We have been above the 200-day moving average. So we got to really create a bottom on Palantir. I'm below my average on the public account on Palantir. For me personally, I'm probably going to be adding definitely shares over the next couple weeks. That's what I'm doing personally. Hood, I've been buying Hood on both my accounts. I was actually talking to one of you all in the comment section about Hood going down to $50. That would be ridiculously, can't talk today, oversold. Hood, I made a great video on. Please check it out. It's a couple videos ago. They are a risk-on company. It's like a casino. In a risk-on environment, Hood is going to flourish. Bitcoin is going through a Bitcoin cycle recession. The stock market is getting hit by individual stocks. One is Hood. So as soon as Bitcoin and crypto goes back on a bullish trend, you're going to see Hood. You're going to see the big investors step back in. I'm going to be adding to Hood. It's below their IPO all-time high. It's also below my average as well, too. I actually have a little bit of a better average on my private account. But on this channel profile, yeah, I mean, Hood is definitely kicking me right now. But hey, I looked at their earnings. I listened to their earnings call. I like what I see for this company. I'm looking to buy more. Meta is really giving me some hibbity-jibbities because of their CapEx spending. And last week, I did sell a share of Meta, and I did rotate that money into Adobe and also Hood. Obviously, Meta is probably going to be heading back down to $600, unfortunately. Sure, I'll go ahead and get another dividend coming up here. So will a lot of other Meta investors. But, I mean, a lot of people are just so fearful on this CapEx spending. Is all this spending really going to produce greater growth rates? Do you believe in AI or do you not? That's the argument. Do you believe in AI or do you not? Sorry, this video is not below 20 minutes. It is what it is. If you believe in AI, then Meta, Google, Amazon, their growth rates are going to be accelerating like crazy. If you don't, well, then you can take some profits. You can definitely, I mean, if you're a long-term, it's obviously, I've actually been in and out of Meta multiple times. Right now on Meta is because, oh man, this is what I'm talking about. When the company changes fundamentally, you got to adjust your entire price targets. I was looking at Meta because of the midterms coming up and the amount of money that's going to be pumping in to advertisements. I was looking at Meta potentially anywhere between maybe $8 to maybe $1,000 at the end of 2026. But the amount of money they're spending this year, unless their growth rates really accelerate, it's harder to reach that. Now that doesn't mean Meta is not a great company. Okay, Facebook, WhatsApp, Instagram, they're not going anywhere. It means that there is uncertainty around companies like this. It's going through a cycle. That 2022 was a buying generational opportunity. It went through a cycle. Could Meta dip below 600? Anything's possible. It's really going through a cycle. So, as Meta pretty much hopefully trends higher, they could go the wrong direction here. But if Meta definitely trends higher and next quarter gives a lot more clarity on their growth rates, and for me personally, I'm probably going to be rotating a little bit out of Meta. Adobe. Adobe's earnings are kind of really weird. They do their earnings like very much offset when a lot of other companies do. So, Adobe, oh man, Adobe, I really got to be buying more shares. This company, I use Adobe products practically every single day, and I guarantee you that you do too. I guarantee you the vast majority of people don't even realize how many Adobe products there are. This company is trading at levels, and their EPS, their revenue, they're triple beating. They're trading right now at levels when you're talking 2 billion a quarter, 2.5 bill a quarter, 10 bill maybe like a year. Back in 2019. Like, no. Okay? AI is magically not going to make these companies disappear. So it's very interesting to see these stocks just go through a utter like recession here. Now, for anyone that does not know, I'm doing a public account profile challenge, like I said. A couple months ago, this account was actually, I believe, close to like 44,000, give or take. Oh yeah, it was definitely up there. Looking to take this amount to 6 figs in the course of 17 months. Obviously, going into March, if we are falling off a cliff more, I'll deposit a large amount of cash, 2,500, and then the account challenge goes down to 16 months. And then April, if I deposit another 2,500, hey, guess what? Goes down. Obviously, it's going to get to a friggin' point if the market's going to be a bear market, or I should say, the stocks are going to be bear stocks for a while. Obviously, I'm not looking to take the account challenge below 12 months. But then again, I mean, hey, like, I'm not 100% cash depleted, and I'm not all in. Liberation Day last year, I was all in. I depleted my savings, depleted my checkings. I was all in on Liberation Day low. I bought the entire way down, and I also bought the entire way up as well too. Absolutely insane in the membrane. Right now, we're seeing individual stocks crash. We're not seeing the market, okay? Looking at the S&P 500, right now we're 2% from all-time highs. So we're not really, like a lot of these stocks are not justifying the market going down. Now, the Qs, we pretty much have a double top on the Qs, and we're 6% down on the Qs because technology and software companies are very much in the Qs. So that's why the Qs are getting kicked in the groin a lot harder. But as my positions here, it's kind of really funny. SoFi a couple months ago was actually up over 100, I believe 120%. So SoFi is my second largest based on gains, not cost basis. I am really looking, I really need to increase my Adobe position, honestly, because of the amount of fears around SaaS. I need to increase my hood position. Definitely. My Palantir position, I was actually looking at, and honestly, 70% growth rates. How the hell do you, like, imagine if Alex comes in next quarter next earnings, and he says 75. It's going to be hard to bring down the stock. It's going to be hard. I've been in and out of Palantir a lot, and this is a phenomenal disruptor company. It's going to be friggin' hard to keep this company down if they're doing that. Pain Pal is pain for a reason. Gotta love Pain Pal. That's pretty much just a hold right now. Honest Company, they actually have earnings coming up soon. They're going through a little transformation period, but for Honest, I'm not looking to do anything long term. If you've been following me, it's going to be a very much little quick trade. But otherwise, yeah, I mean, honestly, this account for the next probably maybe month or so, maybe even longer, maybe all the way till friggin' May, it's just going to be buying positions. But there's going to be a time where you're going to be looking back on this account. If you're in the same stocks as me, you're going to be looking back on your profile, and you're going to be looking at all these names. Probably not a couple here that come to mind, but you're going to be looking at AMD, SoFi, Adobe, Hood, Palantir for sure. Meta is really questionable. Same thing with PayPal and Honest. But like these companies, they are going to be moving to the upside very quickly. And once we get rid of all this nonsense, but just remember, on a closing note, holy cow, almost 30 minutes. Remember why you get into stocks. Remember your strategy. And also remember that what is happening. Companies are triple beating and they are being drawn down. Take it easy, everyone. New video tomorrow and later.